Hi, my name is Daniel Ducina, Director of Investments at Blue Chip Partners. Today I'm going to provide some insight into economics, financial markets, and potential risks and opportunities on the horizon as we progress through the fourth quarter of 2021. From an economic perspective, the U.S. economy really has proved resilient in a post-pandemic world. Thanks to annualized 6.5% GDP growth in the second quarter, the U.S. economy is now officially larger today than it was pre-pandemic. So fueled by robust consumer spending, which is a trend that we highlighted last quarter, we are seeing terrific economic momentum as we progress through the back half of the year here in the U.S. However, it is worth noting that there is one notable chink in the armor in the U.S., and that remains the labor picture. So while GDP has recovered, we cannot necessarily say the same for the labor environment here in the United States. Measured by total non-farm payrolls here in the United States, we are at about a 3 million job shortfall from where we were at pre-pandemic. And certainly that is driven by a stubbornly low participation rate at 61.7% for the most recent reading, relative to pre-pandemic at north of 63%. Employers really are pulling out all the stops. You have a company like Walmart upping its average hourly rate for its employees, a company like Amazon who is offering tuition reimbursement, and small businesses across the country who are offering $1,000 bonuses and free meals to potential employees. However, this has not been enough to come through in the numbers yet. So looking at the data from the National Federation of Independent Businesses, 60% of small businesses here are reporting that they can't even get any qualified applicants. So forget about actually even getting employees in the door. So going forward, we do see some potential for increased wage pressure. Average hourly wages are up 4.3% year over year, and certainly there is potential for this to continue. However, in the next quarter, as we look at the economic picture here in the U.S., we're optimistic that some relaxation in the excess unemployment benefits, combined with the general abatement in the fear of the coronavirus, will help to fill some of those 10.1 million open jobs here in the U.S. Any filling of those open jobs will be very helpful in keeping a lid on wage inflation.